Property values in China's housing market have increased quickly over the past few years. But this development has been fueled by speculation, creating a bubble in the market. There are already rising worries that this bubble could pop, which would bring the collapse on the property market and potentially catastrophic results for the economies of China and the rest of the world. So, is China's housing market collapsing? To find out, keep on watching this video as you clearly don't want to miss out on this. Over the past few years, China's housing market has risen quickly, with property values growing at an astounding rate. But this expansion has been primarily driven by speculative activity, with many investors purchasing residences more for profit flipping than for personal use. Due to this, the market has developed a risky bubble where prices have been artificially inflated and are now out of reach for the majority of regular people. In addition, many of these investors took on a lot of debt to buy these properties, which put them at a lot of risk if the market crashed. In fact, according to some estimates, the property sector may account up to 60% of China's GDP, making a potential collapse even more disastrous for the economy of the nation. Also, the housing market has not been treated kindly by COVID, as there is a clear connection between COVID-19 and the nation's housing market collapse. The outbreak has diminished consumer demand, disrupted global supply lines, and prompted businesses to temporarily close their doors, all of which have reduced economic activity. Due to people's reduced willingness or ability to make significant investment in real estate, the demand for housing has decreased as a result of the economic recession. Moreover, this is making it much more challenging for people to buy and sell real estate. Strict lockdowns have slowed down the overall market. Limitations on open houses and personal property visits have an impact on everyone from homeowners to real estate brokers. What appears to be a mortgage strike is a strategy used by Chinese home buyers to protest against property developers. To put pressure on developers, these buyers have been generating headlines by refusing to make payments. This strategy has generated a lot of discussion regarding the power dynamics in the housing market and quite a bit of controversy. The increase in prices has made houses unaffordable for the citizens, and it has done more damage to the younger generation who have just started their practical lives and were looking forward to living independently, but now feel they are being priced out to the max and are now facing frustration and resentment among buyers. Buyers are wondering if a mortgage is really worthwhile, or if it will come back to haunt them in the future due to the economic uncertainties brought on by COVID, trade tensions with the US, and the weakening of the economy. Some buyers have lost faith and, as a result, refuse to make payments since mortgage lenders in China engage in unethical behavior, such as misrepresenting interest rates or failing to disclose additional costs. We still don't know how successful it will be in reaching its objectives. The city of Hangzhou is one famous instance of a mortgage strike. Almost 30 homeowners in the Xiangxianhui complex, a posh area, went on to a mortgage strike, refusing to pay their mortgages in protest at the high costs and alleged risk of the housing market crash. The homeowners alleged that the developer had deceived them by making promises of an excellent investment, but failing to deliver on them. The homeowners' strike attracted national attention, and some journalists praised them for standing up to the property market and the developers they believed had abused them. Others, on the other hand, opposed the strike, claiming that by refusing to make their mortgage payments, the homeowners were violating their contractual commitments and running the risk of going bankrupt. Now, with the high costs and perceived hazards associated with the housing market, the Chinese government is generally more sympathetic concerning the issue of mortgage strikes. The government has been concentrating on fixing the underlying issues in the market, such as increasing transparency and regulation, promoting the rental market, and loosening restrictions on home purchases, rather than arresting or punishing buyers who go on a mortgage strike. Although it isn't known how often this practice is, there have been stories of individual buyers in China being detained or facing legal action for failing to fulfill their mortgage payment. The failure of buyers to make mortgage payment in specific circumstances may constitute a breach of their contractual obligations, which could lead to legal action against them. The Chinese government has taken steps to try and manage the situation after realizing how serious this problem is. A few Chinese towns are beginning to ease the requirements for down payments on homes to boost buyer interest and stabilize local economies that have been hurt by a regulatory crackdown on the market. One of the first places to relax the borrowing limit is the eastern city of Hezi, which is allowing certain home buyers to make lower down payments on their purchases. The minimum down payment has been reduced for buyers without a history of mortgages from 30% to 20%, and for those who have already owned one property from 25% to 25%, with bank loans covering the remaining balance. Several banks have agreed to offer additional loans to increase demand. China has tightened restrictions on the number of homes a person can buy. The Chinese government reiterated a 4-year-old law that restricts the number of residences one can purchase by restricting foreigners from purchasing real estate. A foreign organization with a branch or representative office can only buy a non-residential house for business use in the city where the office is located. And foreigners must prove residency for at least a year to purchase a house for personal use. The majority of financial analysts think that this is another step towards regulating real estate prices and reducing speculative capital inflow. The majority of real estate investors think that this is not the best option for the economy, since the new policy may not stop overseas investors from indirectly buying properties since there is an option to buy those properties by simply buying local company shares. Due to the country's stricter rules, the real estate industry in China is still struggling. 400 small-sized real estate agencies in Shanghai were forced to shut down last month. Several property developers think that while foreign investment in China's real estate industry may have contributed to the real estate bubble, Chinese cities' overall development was also aided by it, but the limitation on foreign investment in real estate may not be the best strategy for addressing China's current economic problems. If you think that's all, wait till you hear about China's latest move to crack down on the dark underbelly of the real estate market. China is fighting back against shady real estate dealings head-on, taking no prisoners when it comes to fraudulent transactions and illegal developments. This crackdown is expected to send shockwaves across the market by implementing a range of measures in a nation where real estate is king, leaving both investors and homeowners unsure of what will happen next. The Chinese government has taken game-changing steps to regulate and supervise the real estate market by introducing more rules and guidelines for the market, which will transform the way the market operates, by increasing monitoring and investigation of real estate transactions, by setting up dedicated teams that will investigate violations of laws and regulations. The help of AI and big data is also used in this pursuit. The blacklist system is introduced to prevent people and businesses from taking part in illegal real estate activity. This works by maintaining the names of individuals and companies that have previously been held responsible for breaking real estate laws, such as selling false properties or breaking construction codes. The system assigns a score to each and every field within it based on their past misdeeds, and if the score exceeds the threshold flag, then they are added to the blacklist. This efficient approach has been successful in preventing illegal dealings in the Chinese housing industry by enforcing severe penalties on those who operate unprofessionally or illegally. since it lets buyers and sellers to learn more about the reputation and actions of whomever they are working with. It has also contributed to greater openness in the real estate sector. Yet, given how bloated and unstable the market has grown, these efforts might not be sufficient to avert a serious collapse. The Chinese property market crisis is a complicated and perhaps disastrous problem that demands our attention. Although the Chinese government has taken some action to address the issue, it could not be sufficient to stop the market from collapsing. What does the future hold for China and the world? Well, no one knows that. But the one thing that is certain is a collapse in China's housing market would have huge effects. What do you think? Let us know in the comments below. Don't forget to hit that like and subscribe button. Thank you for watching, and we'll see you in the next video.